Yeah.
Welcome,
Yeah.
everyone. We are so excited to have you here with us today. It's taken a little while, but we have my friend and ex-accountability partner, which I think is the best part of any group, is having an accountability partner, Brandon Vukeilich. Brandon's a real estate broker and has his own several companies in the Washington area. He went to the Washington State University. He has a Bachelor of Science, and he is, and here's the best part, and then I'll let him start, is he is third generation real estate investing. So we can all learn a lot from someone who's been around that business and those successful people all those years. Welcome, Brandon. Take it away.
Thanks, Peggy, and thank you for not calling me a realtor. That's my little thing I like to clear the air with first. All agents are not all realtors, but all realtors are agents. I don't pay the dues to be part of realtor organization. Nothing against them so much. It's just we're brokers in Washington. I'm a designated broker for my firm. That's the highest level you can be. I had a property management business in Seattle for a few years and a real estate firm, and managed 300 plus units in the Puget Sound region for that time, and got out of that temporarily because I hated property management, and now I'm back in it again with a couple other partners in the same area, but I'm not doing APM. I'm just managing the brokerage. Like Peggy said, I didn't wake up one day and say I wanted to be a real estate agent. I actually went to school in international business and Spanish, wanted to live abroad, do freight forwarding, logistics, supply chain stuff, and God had a different plan for me. And here I am, 13 years now licensed in the state of Washington. Yes, I learned a lot from my grandfathers that both owned apartments in the Seattle area. And my first investment property was actually with my buddy Casey, who's on the call here. We bought a condo in Vegas, and that was back in 2002. We got a wild hair up our butt to go over there and take a look at condos in Vegas, because we were spending almost every weekend over there. And it worked out great. We put down 10%. We were making like 150 a month, and knew we wanted to keep that going. And, then 2008 hit and made our plans kind of change there. But today I have 30, we call it doors, right? 30 units, 30 doors across 3 states in Idaho, Washington, and Hawaii. My brother's also licensed in Hawaii, and he's my main investing partner these days. We say we're 50-50, but I feel like a lot of days it's 99-1, because when he says no, we're kind of at a stalemate. So that's the trade-off when you're exactly 50-50. Most of our units are in Idaho. I consider myself a mom and pop landlord for the most part. I'm not a big, huge corporation of any kind. We have an 18 unit in Boise and an 8 unit just outside of Boise in Eagle, Idaho. Those are our main big holdings that we love the state of Idaho. But most of my clients in Washington are multifamily investors. I feel like, a few years ago, Rebecca and I were talking about how my business should migrate, and we were talking about getting more out of the day-to-day residential, helping people buy and sell houses, and use my skills and my experience in the multifamily space. And I wanted to keep owning more myself, and so it made sense to walk the talk, right, and help people. My niche I've developed really is helping a lot of newer investors dip their toe into kind of the real estate space. And what I teach them, and I'll tell you all, is what I speak to is not right or wrong. It's one person's investing opinion, right? I tell everyone, thankfully, we all don't want the same thing. It's already competitive enough. It's good that people want industrial and multifamily, self-storage, mobile home parks, Airbnbs. If we all wanted multifamily, my job would be 10 times harder than it is today. So I'm just going to speak to my experience. I know like Peggy likes triple net lease type of properties. I've never really dealt in that myself as an investor. I have had triple net leases I've signed for my businesses. And there's pros and cons. Every aspect, every sector, there's pros and cons. So when it comes to multifamily, it is still, I'll speak to just what I watch in Washington, because I'm licensed here, right? And I'm involved here, but I also watch other markets like Tulsa, Oklahoma, Kansas City, Colorado Springs, Idaho, very closely, of course, because I'm there too. I try to stay west of the Mississippi for the most part, and I don't look too much in California and Oregon, the very tenant-friendly states, including Washington now. But it's still super competitive. Even since rates kind of spiked in above 6% in last June, we're still seeing a lot low supply and still pretty significant demand. The problem is sellers are going through what I still call the 5 stages of grief, like their anger, their denial. They're trying to come around to, they still want the best premium price for their property, and they can't accept the fact that this is the new market, and it's very difficult for a lot of buyers to make their numbers work because rates are now 7%, not 3.5%. So I have personal metrics that I look for, right? When I'm looking at property, I will only buy properties I have pride. If you look behind me there, those are properties I own, and those are all properties that I would actually live in myself. If my whole world collapsed around me tomorrow and I had to move my family to a unit, I would be totally comfortable living in any of those properties that you see behind there. So that's one of my personal metrics. And I typically don't like to participate in the low C or even D if they have a class, and I really don't do A. I kind of like, my personal opinion is the middle of the road, that middle ground where when things are great, people may be shifting up from out of their lower income stuff into something about 12 to 16, 1800, or when times when times are tough, people are shifting down from maybe their 2,500 a month rental down to 1,700 or so. I'm catching them both ways, whether they migrate up in times are good or times are bad, they're coming back down. And most of my tenants, I believe, are probably blue collar people. And I try to remind every one of my clients and myself that tenants are human beings, right? But we're not running a nonprofit. We are in the business to make money. And I do have some senior elder tenants in one of my properties that, I'm giving them a little bit of more leniency than others because I have a soft spot for seniors that are on fixed income and have health conditions and things like that, right? But I can't let them live there rent free or anything like that as well. So personal metrics, again, I like 2 bedrooms, 1 bedrooms, even studios. I'm not a big fan of 3-bed or bigger properties. And going to, again, speak to the pros and cons of that is a lot of people I know love single family because families move in there and they stay a lot longer. So it's less turnover and leasing fees and things like that. My take is I'll take a little bit more turnover for the bachelors or the couples without a lot of kids, a lot of pets, a lot of vehicles, and a lot of noise and all that crap that happens when you've got 3 or 4 bedroom rentals. I'm just, again, speaking from experience of managing everything from single family to condos to apartments in the Seattle, Tacoma area. And as a property manager, what I saw or witnessed or experienced, I just was able to use that information and experience to fine tune exactly what meets my personal metrics. Again, not right or wrong. I know people that slumlord and they cash flow amazing. I know people that will only do A-class properties and they don't cash flow as well, but they have a lot less headaches because they're running into Amazon software techs, engineers or whatever in South Lake Union, and their risk of having squatters is usually pretty low. There are 2 different strategies also that I help with clients, right? There's pros and cons to sticking to 4 units or less. That's residential financing. And I apologize if any of you are super, super savvy, very experienced, multifamily investors, or if you're brand new. I'm just kind of speaking in general here. 4 units or less is residential financing. We know we're locked in today at 6% for 30 years, no balloon payments coming due or anything like that. But you're kind of held hostage to obviously your personal credit, your income, and then comps for that property. 5 units or larger, right? We're dealing in the commercial space. It's based on the income of that property, the global income of that property, and the bank's going to look at that as the primary thing. But you're usually on 25 or 30-year amortization with balloons in 3, 5, 7, or even 10. My Boise property is going to be coming due in 2029, and I'm locked in right now at 3.75, and I'm fairly certain it won't be 3.75 in 2029. So I'm going to have 2 choices there, right? I'm going to either have to refi maybe 6 or 7 at that time, and then my mortgage is going to go up $3,000, $4,000 a month, or I'm going to have to 1031 that property into something bigger, right? So there are a lot of pros and cons. I also started to investigate syndication, and I think if you want to be a limited partner, you should talk to Peggy. She can pair you with the right deals and help you kind of invest as a limited partner thing. I wanted to learn about syndications as another tool on my tool belt for myself, for my brother and I as investors, for my clients. And I wanted to understand that space if I ever wanted to partner with Peggy as a limited partner and what that means. So I'm glad I never started one the last couple of years. I really dove into it about 2 years ago. I'm glad I held off because the writing was on the wall. Being in this multifamily space full time, nothing was, in my opinion, wasn't sustainable. Everything was bonkers, nuts, over asking, hard, $100,000 going hard like day one, waiving contingencies. It was just people buying on a 3 cap when their rate was, about the same. So, lost my train of thought of that. But so, where was I going with that, Rebecca? That's why she's here, to help me with this. Oh,
No.
syndication. Sorry. Yeah.
Oh,
So
yeah.
I held off because I just thought I saw the writing on the wall, and I wasn't prepared to start asking investors to invest with me on something that I felt was going to struggle on the exit. And most syndications, if you don't know, Peggy explains too, right? They have a 3, 5, 10-year exit typically, right? And I just did not see how the exit was going to make sense when everything was already historically low and historically high, that everything was going to be roses and peaches and cream in another 3 or 5 years down the road. So I'm glad I held off. My cousin has invested in the last year or so, $50,000 into 5 different syndications. And he got his first capital call on one out of Dallas last month. They're suspending his dividends. They're calling for more capital. And what I'm hearing from these large commercial Fannie Freddie lenders that I follow is that so many of these syndications did bridge financing, and now they're going to get stuck with their pants down here in the next 2 to 3 years. So kind of glad I held off on that. Okay, talking about more pros and cons, why I'm bullish on multifamily. I get it. It's not the perfect asset in the world, right? What I like about it is housing, and people pretty much always need housing for the most part. They don't always need self-storage. They may not always come and stay at an Airbnb. I do have an Airbnb with Rebecca. We have one here in Tacoma, a 3-unit, but I only jumped into that space because I was so sick of everybody telling me how they were killing it in Airbnbs. And I'm like, okay, I'll try one, and God bless her, Rebecca does a lot of the management of that. If it was just me, I probably would have already sold by now. You are managing a mini motel, as in my opinion, right? You're in the hospitality business now. You're not a landlord, you're in the hospitality, and people bugging you about the Wi-Fi went out, or there's a hair on the toilet, or their kid smashed their foot with their coffee table glass, things like that. They do cash flow better, it's for sure, but it's a trade-off. You're in the hospitality business. I like multifamily because it's what I know, and I feel like I'm gonna not try and shotgun in my investment strategy. I would dabble in self-storage. Casey and I have looked at some self-storage opportunities around the country, and I like that because eviction laws don't apply. I think COVID had our eyes open to what can happen, if you are dealing in the multifamily space. And my brother even came to me as well and said, we should probably look at self-storage because we're not going to be dealing with all these eviction moratorium issues that can happen when these black swan events kick into place. And so that was kind of eye-opening in realizing that, there are risks with multifamily, and when it comes to people and their housing, especially in blue states like Washington, there's a lot of new stuff that kicked into gear to protect tenants' rights. And some of them are reasonable. I totally get it. Not giving somebody a 50% rent increase with 20-day notice. When you jump somebody from 1,000 to 1,500, that person's probably going to struggle quite a bit to make that new rent. And especially when you only give them a 20-day notice. So now we have to give like a 6-month notice, which give or take if you think that's reasonable or not. But at least it gives that tenant time to prepare whether, okay, I need to figure out what I'm going to do in 6 months, or I'm going to have to move out. So what I like about multifamily leasing as well versus like a triple net, I've touched on this with Peggy, is, triple nets, when you have a commercial property, you're signing usually a 5-year lease, and what those fixed increases are at. There's really not a lot of negotiating between that initial term. And then there's usually a 5-year extension or 1 term extension. Leases, in multifamily, I can ebb and flow with the market, right? And as many of you were probably following, is that rents were double-digit increases in quite a few markets, especially in Western Washington. I mean, it's just been, and my Boise property has just been killing it with the rent increases. And I let my property manager handle that, but we're able to increase more depending on the ebb and flow of the economy better than when you're stuck in a triple net lease. Again, just a trade-off, right, that I kind of prefer. The cons, again, speaking to evictions. It can be very difficult where you own your property. That's why I'm watching in other states that are a little bit more landlord friendly, like Oklahoma, Colorado, and of course Idaho has been very good. And there's other states I know that are kind of on my radar. But I'm also trying to diversify. You don't usually get your cake and eat it too when you buy a property In Washington, you don't get high appreciation and high cash flow, cash on cash returns. You know, if you go to Tulsa, for instance, what I've been learning there over the last couple of years is you get much better cash flow, but you're not going to ebb and flow with the extremes of the market that we see in the Pacific Northwest or in the West Coast or East Coast, right? We've had our property values have pretty much tripled in the last decade. It's been nuts. You're not going to triple in Tulsa. You might go up 4% a year, 5% a year, but they're also not going to tank double digits when things get tough either. They said in 2008 their prices probably dipped 3 to 5% and wasn't anything extreme. So going back on that, you know, the evictions in Washington, it can be tough, but it's all about risk management. When I had those 300 units under management in the Seattle, Tacoma area, I had one eviction in 5 years, and it was a tenant I inherited actually. And it always comes down to, I don't care where you invest, what you own in multifamily, what cities, you know, tenant friendly or not, good communication, good screening. Don't give people too much of an olive branch, you know, when they get in trouble. It's still a business, and you gotta follow through as quickly as possible when things get in trouble. And I always a big fan of cash for keys kind of situations too. Okay, and you're getting behind. You don't want an eviction on your record. I don't want to go through the eviction. Just hand in your keys at the end of the month. We'll call it good. I won't charge you anything and that kind of stuff, right? Be reasonable. You want to keep emotion out of it and have what I tell people, have logic prevail throughout investing for the most part. That's why I also scaled trying to get out of the residential stuff and work with investors. Investors are very logical based. We're all of us probably are investors here, right? We look at numbers. Does this deal work? Yes or no? Okay, great. Moving on. This one, let's make an offer. Doesn't work. We don't get it. Moving on. There's not a lot of crying involved in inspections and emotions flaring up. There shouldn't be, right? There's always usually things to resolve between both sides. And I try to keep level heads throughout the process. That's pretty much on the pros and cons. When it comes to property management, I just want to touch on that for people that might, if you struggle with a PM or you're looking at investing in a new market, I always encourage people to vet 2 or 3 companies. When I went to Tulsa and had a property in a contract, I met with 3 different companies, and I came back thinking I would hire 2 of those 3 for different reasons. And I try to encourage people to understand property managers are not house sitters, right? They're not going to drive by your property every week to make sure the lawn has been mowed or that there's trash has been picked up. They're there to, again, screen, place, retain good tenants. They're there to maintain the value of your asset, right? Keep it up as much as possible and make it look attractive to other incoming tenants and just maintain that value. And they'll never manage it like an owner. So then my property managers in Idaho are never going to manage it 100% to my expectations. They're not the owners. And so you do have to invest a little time in managing your management. And it took my property managers about 8 months over there to really get on board, I guess, my criteria or my style of being a landlord or an investor. At first, you know, I told them, I want my leases cycling between March and September. And as September came and I would see like my October statement, I would see that there's two units on month to month paying $150 premium. I called my PM, like, what are these 2 units doing a month to month? Well, they're paying you $150 premium per month. I don't care. I don't want anybody on month to month. I don't want them leaving in December. I don't care about the premium. Put them on another lease. Click. So it took about 8 months for them to really realize it wasn't about the extra premiums on. I like my leases to cycle between early spring and towards the end of summer, early fall. And then to get to manage about, you know, a good PM, whether they have in-house maintenance or do they do everything third party. My brother and I originally, when we decided we wanted to own more rentals in Washington and had a property management company when we were living in California, that company I felt like they were just overcharging us for the little things. They had in-house management and they were just finding things to do so they could bill us. And it was really frustrating. We thought, man, we could manage our own properties way better than this. Let's just find a property management company to buy. We'll just keep adding our own portfolio, grow it. And it takes time to understand what the companies are doing. And that's a very important prospect thing to ask them when you're prospecting is, are you in-house or do you do third party? Because sometimes I feel like they are billing just to bill, and that's never a good thing, right? And you do have to inspect. So my properties are out of state. I go over there about once a year. Now that they're pretty much on autopilot, I do check in with my property manager once a month when I get my reports, and I like to let them know that I'm listening and I'm watching. So even if it's a minor question, I really don't really care too much about. I may just ask them, hey, why is the snow removal 600 in December when it was only 200 in November? And of course, they'll just come back and say, well, we got 6 more inches of snow that month, but that's fine. I want them to know that I'm actually looking at my numbers and I'm tracking what they're charging me. Stuff is not flying under the radar, which goes back to that Seattle one where my brother and I were super frustrated that I felt like they just kind of took advantage of non-local landlords. Other things are important when you're investigating markets to research. Again, I try and teach investors to look outside the numbers. Like, who are the employers in that area? Where's the population growing in that area? What are the demographics of that neighborhood? I even do just a Google Street View. I'm always using Google Street View, and I'm looking for dumpsters and fences with graffiti or tagging on it. Am I looking for abandoned vehicles near that property? It may pencil on paper, and I'm like, great, this looks like a great deal. And then I do a little more research about, well, wait, who's the local employer? What's the population growth in the area? There's a lot of other things that are going to kill that deal for me, even though it pencils okay. And I can't tell you how many times investors go, hey, this looks great on paper, or why wouldn't I buy this? It pencils great. I hear that a lot. And you really have to know about who's your tenant base, what do you have for options of property management, who are the employers, all that kind of stuff. How's the housing, growing in that area? Those are all metrics that I look at. And then also, big one, landlord-tenant laws. Again, I watch it, even though I'm not a property manager anymore and I'm involved in a property management company, for my clients' interest locally, I do stay on top of landlord-tenant laws in Washington. I have a webinar with the Rental Housing Association of Washington tomorrow that has 3 stellar real estate attorneys that are the guests, and they're going to cover all the new laws and ordinances that are kicking into place in the Puget Sound area. So we have, counties here, and then we have cities, and cities are enacting their own little ordinances like Seattle and Federal Way that just become more and more challenging for the mom and pop landlords to run their properties and get rid of squatters. And so it's important. I had a guy reach out to me from Miami this week. He says, I want to invest in Seattle. I found this property I like. I'm like, do you know anything about investing in Seattle? No, I know it's got great jobs. Amazon's there, beautiful city. I'm like, have you walked downtown Seattle lately? It's not as beautiful as everybody thinks anymore, right? You got a lot of needles everywhere. And do you know anything about landlord-tenant laws in Seattle? No, I don't. And I started to go into, you can't discriminate on felonies. You can't raise your rent, any sooner than 6 months. You have to come to an agreement if the tenant doesn't want to take on the proposed, if they reject your proposed rent increase that's over 10%, you have to pay them 2 months rent and help relocate them to another apartment. It's just nuts. And a lot of people don't know that. They just think Seattle, great rent growth, great jobs, all that stuff. But I try and tell people, you got to spend some time trying to understand what's going on locally when it comes to the landlord-tenant laws. Let's see. Somebody have a question? I heard somebody.
I have several questions.
Okay, gosh. Oh man. Okay. And if your local PM that you find, whatever market you're in, I'm sure, and you should ask them, are there any local rental housing associations that you are part of or are involved with? Because in Washington, a lot of people want to save the money and self-manage. And I just shake my head. I'm like, do you have a clue what you're doing? Do you have any idea what you have to do to post notices or how to manage tenants and their leases? Most of them don't have a clue. They're brand new investors. So I'm like, if you're not going to just try and budget for the PM fees, and my company only charges $75 a door, it's pretty reasonable. If you can't even afford that and you insist on doing self-managing, at least join the local rental housing association in your city, your state, whatever, so they can support you, provide you great leases. I can't tell you how many properties I review, and I asked the seller for the leases, and there are these 1-page, 2-page pieces of junk that they found online for free that don't cover anything locally, right? Or they're probably illegal in the first place or invalid. Yeah. And associations like our Rental Housing Association here in Washington, it's operated, it's involved with all real estate attorneys, and there's a support line. They have the best lease docs I've seen anywhere in the country, honestly, and an addendum for just about everything you can think of. Unfortunately, our leases here in Washington now are, pretty thick because you got to attach so much information every time, even at renewals. but those are things I just encourage people, if you're not going to be, just a commercial landlord in terms of industrial, retail, office space, that when you look at multifamily, it's a lot more than just the numbers. You really got to know what's going on the state level and the city level as well. I don't know if they call them back east villages or something like that. But Peggy, did you have a quick question? You want me to keep going?
No, we all have questions.
Oh, okay.
So,
I
yeah.
feel like I'm flying through this information. I kind of have the same spiel I give for investors every week. So,
Yeah. So you ready for these questions? Because they're covered different
yes,
areas.
I just want to touch on one last thing, is about if you are looking for a broker, and I say broker, not a realtor. Casey and I used a realtor in Vegas, and that's what burned us. She didn't know anything about investing in real estate. If you're looking to partner with a good investor-friendly agent or a broker, have a good conversation with them. Understand that, make sure they listen to what your goals are, what your criteria are. They should be assisting you in the planning, the acquisition, and the liquidation eventually of that asset, right? Helping you with 1031s. I helped Casey's brother. He had a single family, and I told him, man, you got to get into more doors, instead of this one door thing. And we did a 1031 from that single family into a duplex. And now he's already wanting to take that duplex and do like a 4 or 6 unit. And that's the thing, keep the momentum going. You should be analyzing deals together. You shouldn't be bashful about asking your broker about, hey, what do you think about the numbers on this deal? And even out of market things. I'm here, I want to be a resource for investors. I want them to start with me anytime they have a question about investing in real estate, because I do have connections across the country as well. And I feel like I'm just about creating raving fans and referrals. And if, Nathan here says, Brandon, I got this deal that I found in Tulsa. You mentioned Tulsa. Can you help me run the numbers? I'm happy to run the numbers, and I can partner you with, one of my agents down there, Dahlia, or somebody could help you kind of run through on that transaction. And then also helping you maybe pre-vet property managers. I have a long list of questions I ask property managers, and if anybody wanted questions about that, there's a lot of things you want to know about how they run their business that most average investors don't think about when it comes to the PM side.
So thank you very much, Brandon.
Okay.
You actually brought up 3 different subjects. As far as I'm concerned, that was 3 different presentations you could get on 3 different dates. I'm serious about that, because we like the shorter introduction with trust me, wait till you see the questions go on forever.
That's okay.
You bring up a subject, somebody starts thinking about what you just said, and it strikes them. Now everybody else has questions around it.
You mentioned that I should allow about 30 minutes after, so I did. I'm good on time, and that's what. And I sorry, I do get kind of sidetracked on some of these topics. I get excited about talking about one thing or the other. So,
okay. Well, I'm going to start with. So you brought up a subject about loans, and if you had to sell a property at whatever time it is because your loan became due, and you're at 3.5% now, and you had a choice of, and you might exchange into a larger 1031, wouldn't you also be going into a higher interest rate at that time?
yes, but I'm going to try and find it.
Make about being into a larger property or doing a refinance on the one you're in?
I want to keep scaling up. Again, talking about my brother as my anchor sometimes. If it came down to it, I would love to 1031 that property into more doors. So take that 18 unit and maybe try to get into 30 or 40 units, because you get more efficiencies, right? And obviously your vacancy rate is a lot different when one person moves out of an 18 unit versus one person moves out of a 40 unit. Your vacancy rate's a lot lower. So I would have no problem. And if the rates are higher, they are what they are, but the cap rate should also go up as well. As rates start to go up, they cannot stay so compressed where they're at and expect investors. I mean, the only people that are making some of these deals work to me are all cash, or they're pressured 1031 buyers right now. They got to move their capital quickly, or they're going to face the consequences.
Okay, thank you for that answer. And by the way, if you wanted to go passive, you might be able to get into more doors if you 1031 exchanged into perhaps somebody that we're working with that'll take 1031 money. And then you could be maybe in 500 doors instead, because again, you have that partnership.
Exactly. Yep.
Like that. And then, the capital call, that's not very nice. But I did want to know, you have this cycling of April to September. That's when you want your turnovers to happen. What's the particular reason for that?
Just that nobody really intentionally wants to move between Thanksgiving and New Year's. And so when you have a vacancy come up, say December 1st,
Yeah.
that's right when families come in for the holidays. You may be traveling, the last thing you want to do is be packing up boxes and moving from one apartment to another. I want to have as large a pool as possible of prospective tenants. And that is usually spring through summer, just when everybody else ideally wants to move. Yeah.
All right, great. Thank you. Tyshawn, you have Casey has a question. Tyshawn has a question. So
yeah,
Tyshawn,
y'all want me to go? So my question is, when we talk about property management, because I'm using Tyshawn's, I think, login, but this is Derek Moore. I currently have 11 doors right now in Newport News, Virginia, but I'm actually managing it from Seattle, Tacoma area, because I'm stationed over here in the military. So, and your story that you gave, your experience is exactly what I used when I had a tenant that could not pay the rent as well. But the thing is, I don't have a property manager. I'm doing it on my own, but you kind of seem to be encouraging it. But I feel like if you do have the experience, don't you kind of feel that it's might be beneficial to do the property management on your own? Because I'm still looking to expand even further.
I would say it all depends on your bandwidth and how much tolerance you have for pain. I've learned that I don't even care if I have a rental next door to where I live. I'm going to hire a PM, my PM company. I want that distance between me and the tenant. I don't want calls on Saturday at 6:00 that somebody's toilet's blacked up. I don't want to have to go post notices. I don't want to have to chase anything. I don't want to deal with disputes. I will gladly pay 8 to 10% all day long on my properties.
and Derek, what you could do
Okay,
is
so you just basically what you say. Go ahead. I'm sorry. Go ahead.
I was just going to say what you could have if you want to keep maintaining your property management position is have a good handyman in the area. So you could call that handyman, or you could have your tenants call a handyman.
Right. And I do have a good handyman, and I have a website. So the maintenance requests and everything go on the website, and it goes directly to my maintenance tech that I got that's on call, because he's managing all of the properties. But I do see where you're coming from, where you can kind of just relax and just say, the problems are going to happen, but I just want to make sure that the checks are still rolling in, the money's going in, the money's coming out. So I think that's the perspective you're coming from, if I understand you correctly.
Yeah. And I think if you've got a system set up, Derek, go for it. Like I said, I just don't have the bandwidth or the resources to deal. Like my 18 unit recently just had a leaky roof and had to get bids and stuff. Like, I don't have time for that. And then my 8 unit got a notice from the city about the dumpster enclosure was looking too derelict and needed to be fixed. I don't have time to get bids for that. I don't have time to deal with it. So again, it's just if you can save the money, I do agree, go for it. If you've got the bandwidth, go for it. It's just not my preference.
Thank you. Casey.
Yeah, by the way, I am so excited for this call for like a gazillion reasons. Brandon, fantastic job. So I would just say this as knowing Peggy extremely well and knowing Brandon extremely well, spend a couple of minutes with these guys and really let their experience shine through in having a conversation. So that's all I wanted to say. Fantastic job.
Thanks.
Oh, thank you very much. What a nice compliment. Fred.
Hi, thanks, Peggy. I was just wondering, you mentioned you like the leases to cycle 6 months. Is there a reason you don't do longer, 12-month lease, or?
I just like them to cycle, Fred, in that 6-month period. I don't usually sign 6 months. They want the PM to do a year. So June to June, July to July. Or
okay.
If we do have an issue and somebody has to vacate early and it's November, then I ask my PM to sign them like a 6 to 9 month lease to get them back in the summer and then start renewing at a year time.
Okay, I got it. Sorry, that makes sense.
And in Washington, and some people say, well, I got this tenant locked in for 2 years. In Washington, we have to have leases notarized over 1 year. So I don't like to do that. And I also don't, the markets can change so much. I don't know why you would want to lock someone in for more than a year at a time.
Right. Okay, great. Thank you.
Yeah, great thought there. Anyone else have a question before I go on with all mine? Yes.
Yeah, I just wanted to make a real quick comment on what Derek brought up about being his own property manager. You know, I mean, when you go into multifamily, you're going into multifamily as an investor. And if you've ever read the book Cash Flow Quadrant, you could spend your time on the B or the I side, or you could spend your time on the E or the S side. And if you are the property manager, you just created yourself a job. And you might think you're saving money, but if it doesn't pencil out well enough where you can put a property manager in there, might not be the best deal to go into, because really you want to be able to leverage your own time so you can do more. So if you are the property manager, you're reducing the amount of time that you have out there, the most valuable commodity that you have, where you could be spending that time somewhere else and developing another property for acquisition. It's just my opinion.
That's a good point, and it's a great book, Cliff, for sure. And I've even offered in some clients that want me to have some skin in the game. Nobody's taken up on it yet, but I'm offering to take a small piece of the equity and I will take over the management. But that being said, is I will just pay my management company to manage the property and I'll oversee them, but without bringing any cash to the deal. Then it takes all that headache off their plate and just giving up a little bit of equity, and gets me in another deal with not a lot of cash.
Oh, another new message. Okay,
Did Harita have her hand up or something? I thought.
does she? I get this meeting in the way. Nope, nobody else has their hand up yet.
Actually, my question.
Go ahead.
Yeah, my
Okay.
question was like, how do you use any tools to manage if you're managing yourself, but you were not managing yourself? So that's why I took off my hand.
Are you talking about tools to manage properties? Is that what I heard?
Yes, like for writing the leases or like sending the leases.
Right. So our company uses Appfolio. It's a fantastic platform for most small and bigger companies. There's also Yardi, Matrix. I think it's Matrix, Yardi. But I know a lot of just smaller mom and pop type of landlords that just use spreadsheets, good old spreadsheets or QuickBooks, even just to kind of keep track on their, they have maybe 12 single family properties that they manage. And that's when the Appfolio probably doesn't make sense, because you're just paying so much. That's not needed if you have any basic bookkeeping skills at all.
Yeah, it would be good if mom and pops would use something like QuickBooks, because it is set up, or there are other programs that are set up to track the income and expenses. And then when you want to sell it and they hand you a spreadsheet, you're like, there's no
Exactly.
verification on this. Oh my God, how do I know these are real numbers? You're giving me a spreadsheet.
It happens all the time. It's so frustrating. You tell me you want 1.1, but you can't even back it up. You don't have any records. I'm just supposed to take your word for it. I mean, I don't get it.
Yeah.
You knew you were going to sell and you didn't take the time to put everything together. It just boggles my mind.
And do they have a CPA that can verify that? Well,
Right.
there's always their tax returns. And then of course, that's where the real stuff starts, because they don't claim a lot of stuff on their tax returns. So now they can't verify it at all.
Yeah, right.
Right. So anyway, some things just never change in that. I did want to make a comment. You were talking about different things to ask property when you were talking about, oh, that property looks good. The numbers look good, but you're not really sure until you actually walk the property or go out and drive by. One of the first things I was doing when I was buying properties was to pick up the phone and call the police station. You could look online now to see where the police are making calls, and
Right.
they also put the kind of calls they're making. And if you're seeing domestic violence it's like, maybe that's not the place you want, because those are the
Yep.
most difficult tenants to work with. Same when there's drug calls all the time, shootings in the area, things like that. But you call the police department, and I used to do this, and my question would be, would you let your daughter live here?
Right.
And then you really get the honest answer from a policeman or a policewoman, because they will tell you whether they would let their daughter live there, because
Yep. And
These are
Cliff
some- there's
put in a good he put in a good website. It's called Stop Crime or Spot Crime. And it's exactly that, Peggy. It helps you kind of see what some recent burglaries, theft, rape, assaults, all in that kind of the neighborhood. I was just looking at a couple of deals in Tulsa, and I used that website, and it was pretty helpful. Give you a sense. Yeah.
I didn't know there was a website now. Yeah, well, it's been a while since I went out and looked for properties. It's so much more fun to have other people find the properties for me. and
Yeah,
do
the
all
only
the work.
caveat with spot crime is it doesn't cover some smaller cities. And some smaller cities may actually have their own crime website. So if you do like crime reports for and then name the city or the county, they may have their own website for that.
Right. And then the other thing to do, which we always did, was to call the economic department of the city to find out what companies are coming in, what they're doing to bring more business into the area, and then who's leaving. Great, we all check to see who's coming in, but is anybody leaving? Yes, sometimes they are leaving more than they are coming in. So you want to ask that, and then what kind of income the people are going to get. Is this going to be a minimum wage job, or is this going to be, engineers making high double digit, triple digit incomes?
Yeah. In
So-
development as well. We have a big thing here that's happening
Yes.
called light rail that's going from Everett to Tacoma. And boy, you can't even believe the demand or the hype that everybody wants to follow that light rail system all the way down, whatever, 40 miles or whatever it is, 50 miles, because they know people will be hopefully taking that, but I don't know.
Are they in the midst of building it, or is it still in the planning
There are
process?
sections that's open and that most of it should be done by 2025, I believe. It's only
it's too
costing
late.
about $1 billion a mile, but we'll see
Yeah,
how
you-
that works out.
Yeah, the smart people have already been in and picked up all
Yeah.
the land.
Yeah.
For, before anybody knew that was happening. So that's really, one of the things you're talking about what you need to know is you always look at what's going on with the planning department in any city or wherever you happen to be, and you're thinking about doing anything, is to know what's going on, because most people that go in and really make the money go in as soon as they know that there's talking about a plan on a certain highway where they're going to put a light rail or they're going to expand the highway or whatever, and start buying up that land and holding it. Land is called land banking.
Mhm.
Buy a lot or you buy an acreage and then you just bank it for 10 or 15 years.
Right.
And you sell it at quadruple or more of what you paid for it. We know people that had done that for years in California, did very well. Some of them didn't live long enough to get it sold. Unfortunately, they had to hold it that long, but most of the time most people make really good money.
Yeah.
Derek is back with another question. Derek, are you unmuted?
He looks unmuted.
Well, maybe he's just waving.
Peggy, I've got a question.
Yeah, Mark.
Yes, Mark.
You'd think that I'd figure out how to raise my hand in Zoom by now, but I'm not finding the button, so I'm just going to butt in here.
That's in reactions.
Hey, I just want to say thank you to you and your team. Another home run of a presentation. You guys are knocking it out of the park. Good job. And Brandon, really appreciate this.
Thanks.
I was intrigued by your idea of taking a small piece of the equity to handle the PM duties on that. So does that mean you would just cover those expenses yourself for that piece of equity, or would you also take a corresponding slice of the rent to cover your expenses with that?
I was mainly speaking to, I would just cover the PM fees. So buy my way in slowly in the equity piece, right? Basically funding that. I think like this recent deal I was looking at was going to cost $300 a month, so $3,600 a year, but I'm going into it 10 or 15% a partner. It's pretty low cost. And then I'm just involved in managing the management. I must admit that Rebecca and I do manage our own Airbnb property. We don't put that one out because short-term rental management companies are 25 to 30%, not 6 to 10. And because we're partners, we did divvy things up. I mean, she handles all the short-term rental reservations and things like that with the cleaning crew. I handle all the accounting and books, and then also the short-term rental of our back unit that goes to more of a midterm rental rate to traveling nurses. So they're signing on like 90-day contracts. And I handle all that stuff, but it's pretty minimal on my behalf. Rebecca does a lot of the work. So
All right,
Sounds
great,
like a good
thanks.
management team.
yeah,
Derek,
I like partnerships.
Yeah.
People are afraid of partnerships, and yes, I've had bad ones. Casey and I have been in bad ones before. But what I tell people going forward with partnerships, it's all about setting very, very clear expectations and what are the rules, right? And who's going to do what, and then everybody sit down once a year at the minimum and assess how everybody's feeling. Are we good? Do we want to grow? Do we want to buy somebody out? Who's pissed off? Who are we all happy? Like I wanted to sell the Airbnb last year. I got voted out, but that's just the way it goes. And I roll with it. Maybe that would pan out to be a better loss in our favor a couple of years down the road. But I think partnerships can work just fine as long as expectations and roles are clearly articulated ahead of time, and assessed on a yearly basis, if not monthly, really. But
That's smart. Most people don't do that. They just get all ticked off and then divide everything up and get out
yeah, well,
and have a conversation.
the funny advice I ever heard about an operating agreement for an LLC is you only pull it out when things are not operating, right? As a partnership. Nobody looks at it until things are not operating.
Duh.
Yeah.
Derek, were you able to get off mute and speak?
Are you talking to me, Peggy?
Yes, you had your hand up.
Oh, I did. I just wanted to chime in again because about the whole property management. I also wanted to say too, I think maybe one of my biggest fears is that I was just concerned that the level of care as far as just managing the properties, if letting another company do it, and they don't put their maximum effort into it because they're just managing and they don't own it. And I think that's what my biggest fear is. And I don't want tenants to complain and say, oh, this didn't get fixed, this wasn't taken care of. And
You broke up, but I would say, I don't know if it's my connection or yours, Derek, but your fear,
because it's my property.
Your fears are definitely reasonable. Unfortunately, the property management industry is filled with incompetent, unprofessional, crappy PMs. It's just the nature of the business. It was so easy for me when I had my PM firm in Seattle to take it from 100 to 300 doors in like a couple of years because there were just so many crappy ones out there, and landlords just trying to find somebody that was going to take care of their property and place good tenants and keep good tenants and communicate well. So yeah, I get it. That's why it takes time to kind of vet them. And I go out to Idaho once a year and I walk my properties and I tell them, hey, you got to trim those trees again. They're starting to overhang, or I literally like to get that thing removed, or we got to pressure wash the siding there. I mean, again, they're not the owners. They're never going to manage it like our expectations, right, as owners, but they can do a good job once you get them stabilized, I think, to your expectation. What's up, Cliff?
And then there's one more thing. And then also too is, with property values, as they do continue to go up, I've been able to actually do refis and they be able to, and get these houses appraised because I've been managing myself that the tenants have been, I've been making sure that they upkeep the property. So that way when the appraiser goes in, he has nothing but great things to say because the place isn't run down. So I think that was the other thing that I thought was looking at as the trade-off with the whole property management aspect.
Do you just do single family, or do you have any multifamily property?
Everything is single family, but I do have a couple townhouses that are together. So okay. That's the closest I got to it.
I was just curious when you said you're raising the value, because we're still 4 units or less. We're hostages to comps. 5 units or more, you can force your appreciation if people on the call don't know that, right? If I take my NOI from 100,000 to 125,000, I can greatly, based on the cap rate for that market, I can force the appreciation on my property. When I have a duplex in Tacoma and I go to try and refi that duplex, the appraiser is going to go off of comps of other duplexes in that area. So I could put in gold fixtures and try and raise the rent to $4,000 a month in those but if they don't comp out to other things in the area, it's not going to, I can't force the appreciation as much.
That makes sense. I get it. That makes lots of sense.
Yeah.
Right. Yes, Cliff. And we're at almost at the top of the hour. So if you have another question, raise your hand, please.
I wanted to respond to Derek again. So, when you're talking to your managers, you want to be able to interview them properly. So instead of asking them a question like, have you ever had a property where you had a drug problem? Most of the time they're going to say no. But if you change the way you phrase the question and say, tell me about a time when you had, a drug problem in your property and how you handled that, then what you're doing is you're kind of forcing them into telling you, and either they haven't had a problem because they don't have enough experience, or they have had a problem, they're going to tell you a story. And then use that to gauge their level of professionalism in handling that problem. And then when you're talking about, having a lazy property manager, create KPI metrics that are tied to a bonus. And that way, if they get a certain number of lease applications, that have been qualified, if they're able to, keep your units rented for a full year without turnover. So different metrics that you can give them, which encourage them to stay current with their job, build relationships with the tenants, and do their job the way it's supposed to be done. You should be able to find a good manager and keep a good manager.
Yeah, Cliff, my Boise property manager, when we were out there looking at that first 18 unit, we brought them out. They weren't managing that property. The broker connected us to them, and they said the average rents are about $750 when we were looking to buy it. They said, Brad, this is a great property. These rents should easily be over $900. And they actually charged us a flat fee, like $500 a month. And they said, we're going to only charge you $500 a month until we get these rents to average $1,000 a month. And then we'll start charging you 6%. And it took them about 18 to 20 months to get there. I mean, it was like crazy fast how quickly they did that. But that was them showing, look, we're so confident in the market and our ability to manage this property to perform better, and that these rents are so under, we won't take much until we get you to where you should be. I thought that was awesome.
That's a rarity.
Yep.
And are they national, or are they just in that one area?
They're just out of Boise. Yeah.
Yeah. So they're local, they're hometown people, and they probably have a reputation in town.
Yes. I think when I hired them in 2017, they had about 400, 500 units. Now they're like 1,200 or 1,500 units under management. So they're top notch in terms of PM companies. They're out there. Again, I mean, took a while, but they're good.
Thank you very much, Brandon. Anyone
Sure.
else have any other questions? If not, thank you very much, Brandon. We would love to have you come back and divide those 3 conversations, 3 different presentations,
Sure.
Because people do have a lot of questions. I mean, most people are in different kinds of assets, and a lot of people are in partnerships, but they want to know how their properties are being run by someone else. So thank you very much for all the conversation today.
Thanks for having me, Peggy. Thanks for Casey pushing me to come be on this call.
We have one more question, Fred.
Sure.
Hey, Brandon, can you put your contact information in the chat box?
Peggy has it all. She'll
Okay.
Just let me know, Fred. Put that in the box, and I'll get you connected. So thank you very much.
Yep.